After 8 weeks of solid up movement, we see a bit of slowing in the S&P 500. On Monday, we see a red open box candle again, a sign of caution as the week starts. It's just the first day of the latest weekly candle, but the derivative oscillator has lost energy and the price percent oscillator has lost a little bit of its energy. Now, just day one of a 5-day candle, but very important to pay attention to and note. S&P down for the day 0.36%. We're wondering when all of this up movement is going to stop. We look at price movement sitting right there on the weekly trend line. Do want to thank everyone, all of our Patreon members, for your feedback over the weekend. We put out a special training, an extra special training no one was expecting on Friday, about how to find the proper entry points. Remember, when you find potential trades, investment opportunities for your practice, trading and investing, you need to find the best entry point. We talked about how to find those, extremely important. We also went over the stocks and ETFs that our Patreon supporters were interested in. Did a special training on Sunday night for that. And don't forget, this Wednesday, for all the Patreon supporters, please go ahead and send us your questions. We'll have about a 30-minute or so live question and answer call in. We'll be answering as many of those as we can. If you're not a Patreon member and you want to be involved in all these special trainings, just follow the link there at the website. You'll see it under the show notes. If you're not a subscriber, please go ahead and subscribe for free. You'll get the training that we give out every single day. If you want to know what we do, and I have a lot of questions where people, I guess, tune in for the first time, and then they'll send me a bevy of about 5 or 6 questions that would take me an hour to answer. And I'm sorry, but I don't have that kind of time. What I would encourage you to do is we have lots of great training at the website. Hundreds of thousands of downloads of various things that we put out there on Heikin-Ashi candlesticks, on weekly vertical crossovers, on the price percent oscillator, the derivative oscillator. I mean, everything you can imagine we provide for free at chartingwealth.com. Go through all of those trainings. Buy the book. You can find a link in the show notes to purchase the book. And again, buy the book, Charting Your Way to Wealth. It will give you the down and dirty on what it is that we do. And we do not provide it in a digital format. I specifically do not do that. I want you to have a hard copy of our spiral-bound book. And it's spiral-bound for a reason, so you can use it, open it, have it there with you at the computer as you're working on this kind of stuff. It's more expensive to do that way. I could have printed a cheap paperback version, but we did it in spiral bounding for a reason. And again, we also have for free our trade worksheets, daily market worksheets, weekly market worksheets, all there in the links at the show notes, so you can download those PDFs and fill them out by hand as you listen to the program, which I think is the best way. There's something magic about putting pen to paper, thinking about it, having a hard copy record, something you can look at, refer to, make your own trader's journal. Those things are so important. Okay, let's jump back into the middle of what we are doing. We see that the weekly is starting off weak on the S&P 500. And of course, when we go to that, from that, we head to the 2-day chart. We see on the 2-day chart, again, that weakening. It's really a sideways slide. The last 2-day candle ended on Thursday, and of course the prior one, this latest one, encompasses both Friday and Monday, and it again is a green spinning top. It was a red spinning top previously. That means indecision, tending up, price movements just right there at the 2-day trend line. It actually started off below it. We can see that the price percent oscillator is flat. Derivative oscillator's been losing energy since it topped out back on the 2-day candle ending the 22nd, Friday the 22nd of February. So again, as we look at this sideways slide going on, we've had them before. What is the market doing? Is it simply gearing up to move forward? A little bit of concern because we hadn't seen a red candle, a red open box candle for 8 weeks. So we are concerned about that. We go from the 2-day to the 4-hour. And of course, that's where we see what happened. We had a whole lot of craziness going on in the morning. A red spinning top with huge wicks on the top and bottom, and then a big down move in the afternoon. Derivative oscillator gaining momentum. Price percent oscillator heading down, but that sort of bizarre morning is what we see going on there. So pay close attention. If you have been in the move for an extended period of time, you've done very, very well. Of course, the initial warning signs took over when that 4-hour chart crossed over and really has been sliding sideways and down, bumped up a little bit on Friday, but then really started torquing down on Monday. So pay attention. If you're still in the up move, you're still in that weekly vertical crossover area, just be careful as to what's going on now with the flattening of the 2-day chart and the warning on the weekly. So watch, pay attention, don't hesitate to take your profits. You can always get back in at a later point. So we're going to go from the weekly to, back to the weekly, and from the S&P 500 to the Nasdaq 100. Now, the S&P 500 down 0.36%, Nasdaq up 0.02%. That's not much, my friends. That's 0.2%. So it was up. The week has started off with an up candle, a green up candle. Derivative oscillator, however, has lost energy. Price percent oscillator losing some energy at the start of the week. So we go from the weekly candle to the 2-day on the Nasdaq 100 as represented by QQQ. Nice thing is, as far as it goes, price movement is above the 2-day trend line. Derivative oscillator has really peaked out all the way back on the 18th, so it's continued to lose some energy. Price percent oscillator is flat. So again, just continue to pay attention to that. The price movement being up is nice. It popped all the way up to 75.79, which is not bad as far as this 2-day candle goes. And we go to the 4-hour, we can zoom in a little closer, and that's where we see where things popped up in the morning with a green spinning top, and then down in the afternoon, not down as far as we saw on the S&P, and we do see, again, we've been in negative territory on the price percent oscillator, but it is sort of heading up a little bit. Derivative oscillator losing downward momentum. So again, price is above the 2-day trend line, but watch if it starts passing through that and you're still in this trade and you didn't have yourself bought out at that 75.79 level, which was a great level, particularly looking back at other areas where the market topped in the past at 75.58. Okay, 75.79 was a good knockout point. We talk about different levels to look for things to hit on prices, and that's sort of where it's topped out previously back in November of 2018. So again, watch and see if that's where the market is going to hesitate. Potentially may blow through that. If it does, great. But pay attention. So we go from the weekly now to the 2-day. And of course, I'm sorry, we were just talking about where things were topping out. And again, the 2-day's gone flat. And then we go to the 4-hour. And of course, yeah, that's where we saw things really rolling over and just hovering above. So pay attention to all those things. You know, once you do your entry point, that's when you then go back to that 2-day and that weekly chart, help you make decisions on whether or not to stay in. All the charts, all the time. And then people will say, well, how much emphasis do you put? What's the rule on the 2-day? What's the rule on the weekly? Each chart has its own personality, has its own emotions. They change throughout the year depending on the trading zone that you are in, whether it's the summertime trading zone, fall-winter trading zone, transition zones. So again, that's why you want to fill out the weekly market worksheets, the daily market worksheets. Keep your trader's almanac going where you collect all those. And your trade worksheets when you do a practice trade. All those things together help you gain an understanding of the ETFs or stocks that you follow. You don't follow 20 different ones. You can't learn their personalities and how they work. You follow 3 to 4. And really no more than that. You don't need more than that. Because again, if you're following things that move and that are trackable, you've got all you need right there. You don't have to get greedy, because when you get greedy, you get stupid. And there's plenty of great ways to do successful long-term practice trades and get good at this with a small number of ETFs or stocks. Now, let's go back to our weekly chart, and we're going to go to 20-year bonds up 0.78% for the day. Interesting. However, when we look at the weekly chart, we see the week starting off down, trying to go into a weekly vertical crossover going down. Now, again, Heikin-Ashi candlesticks. If you haven't taken that training, it's available like 106,000 people have. So go watch it, listen to it, learn from it, take notes as you listen to it. That weekly is going down strongly. We see the derivative oscillators flipped over negative and the price percent oscillators trying to cross. We go from the weekly to the 2-day, and we see on our 2-day chart, this latest 2-day candle is a big, strong down candle, moving down quite strongly on that 2-day trend line. Again, pushing through the prior trend line. It was so strong it actually knocked it over. We see the derivative oscillator gaining downward momentum, the price percent oscillator heading down. We go from the 2-day to the 4-hour, and we see that's where we see the movement as far as sort of a doji in the morning, indecision tending up, followed by up movement in the afternoon, derivative oscillator losing downward momentum, price percent oscillators about flat. So we had the oscillators affected by 1, 2, 3, 4, 6, okay, so 6 3 days of strong down movement. That's what was pushing the oscillators to continue in that downward momentum. So pay attention. That's the push right now on TLT 20-year bonds. We'll see how things shake out there. We don't have a trade, of course, until we have a weekly vertical crossover going down, because the 2-day's already going down. The weekly's been in a confirmed up move. Looks like that might be changing. If indeed the week closes with it crossing over going down, we'll call that. We'll let you know that we have a weekly vertical crossover in effect, and then that gives you a potential jumping in point the following Monday at 10:30 a.m. If that's the case, we'll talk about that more over the course of the week and how to play that. So lastly, we always go to gold. And of course, as I was telling our Patreon members, you want to look at a beautiful chart. If you are interested in gold, why would you not look at our beautiful chart on gold? When it crosses over going down, gold goes down for a while. Crosses over going up, gold goes up for a while. It is just so pretty what we see happen with huge movements in gold. What's gold doing now? Well, looks like it's going into its second week of strong down movement, starting off with a big down candle forming. Again, just the first day, but very interesting to watch. Gold down 0.26% for the day. Derivative oscillator losing tons of momentum. Price percent oscillator spiking down like a hockey stick. We go from the weekly to the 2-day. That is, of course, where you see there was a sideways slide, and then we have 4 days of strong down movement. This latest down movement on Monday, encompassing Friday and Monday, really going down. Derivative oscillator gaining lots of downward momentum. Price percent oscillator heading down quite strongly. And we go from the 2-day to the 4-hour, and of course you can see gold crossed over on that 4-hour chart going down back on Friday the 22nd in the afternoon, and has really sort of accelerated the down drop. In the afternoon was the first hint of some up movement after a strong down morning. Derivative oscillator gaining downward momentum, price percent oscillator heading down. So we'll see how 20-year bonds and gold shake out by the end of the week. If we have weekly vertical crossovers on both of them, that would be most interesting. We shall wait and see. Again, if you've not ordered our book, please do so. It's a way to support the channel. And of course, if you want all the special goodies, the short chart training, the Bitcoin training, the quarterly long-term training, we have all that available for our Patreon members, plus our monthly Q&As, our chart reviews that we do, and we would love to have you join us. Thank you, my friends. All the best. God bless from the whole team at Charting Wealth World Headquarters.